Today is Tuesday, June the 21st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Starting with the grain markets this morning, Steve, soybeans, soy meal, soy oil, corn, and wheat all trading lower. Why, and will this trend continue?
I think the market has given up on some of the demand talk that people were talking about, whether it's inflation, just a higher cost of goods. It seems like everybody is kind of backing off on some of the demand forecasts. We haven't seen corn, soybean, or wheat export sales like we would like to see. That would suggest that our exports are going to increase from the USDA. We also have seen just a major drop in world vegetable oil prices led by palm oil. Some of that is due to concern about Asian demand, but also Indonesia kind of shifted gears and decided to export palm oil, which the market was not expecting. So I think that the inflation concerns has liquidated some of the grain longs. There's also talk that we've seen so much losses in some of the outside markets that funds were taking profits out of the grains because they were profitable, and that it's just hard at the end of June to rally a market unless you have a severe weather problem.
Steve, speaking of demand, do you think inflation and the supply chain challenges will impact demand or have impacted demand?
I think so. I mean, I think that we're seeing a drop in food demand, starting to see a little bit of a drop in energy demand. And because of the lack of exports out of the Ukraine, maybe lack of wheat exports, all those things I think is making it harder for people to buy. In fact, like the North African countries have to get borrowed money just to buy wheat. So definitely, I think that inflation, the threat of higher interest rates, talk that inflation will get only worse instead of better through 2023 is all impacting grain prices.
Finally, Steve, on June 30th, the USDA will report on planted acres. What do you expect them to say, and what's the expected impact on the futures prices?
I think this is one of the more critical reports that the USDA will be putting out in 2022. The market is looking for maybe just a real mixed bag as far as corn acres are concerned. The crop is planted late, and so we have some people looking for a little bit more than the March intentions, but both are looking for less corn acres than a year ago. As far as soybeans, I think most people are looking for an increase in soybean acres. Wheat acres could be down about 1 million because of the lateness of the spring wheat crop. And as far as stocks are concerned, the corn number is going to be the most important thing that people are going to look at. The guess is, around 4.3 billion bushels versus 4.1, but cash basis levels are all at all-time highs. Down in the Southwest, feeders are paying almost $2 over to try to buy corn. Central Illinois, the basis is 70 over, and so it just feels like there's not as much corn out there as there was, given the USDA numbers, and that maybe last year's crop was overrated. And then the soybean stock should be bigger than last year, but again, when we look at demand from here forward, it would suggest that the final carryout could drop as low as 150 million bushels, which should impact prices. So I think that the acreage, people will kind of look more at the stocks numbers, which could be friendly to prices.
Alan, Fed Chair Powell will be testifying before the congressional committees tomorrow and Thursday. What do you think he'll say?
Well, first of all, most likely he will, of course, talk about the need to control inflation. I think he will give some very strong hints that we will see another 75 basis point hike in the Fed funds rate at the next meeting. That's the July 27th meeting. And additional increases later this year. I also think he will predict that the economy will have a soft landing. Uh, this comes at a time when some analysts are thinking it may not be quite so soft, but I think Powell will try to talk up the idea that the Fed can hike interest rates and still not do too much damage to the economy.
Alan, when do you think the short-term interest rates will top out?
Well, I did the calculations over the weekend, and it looks like March of next year is the likely top for short-term interest rates. Of course, that would be Eurodollar rates and Treasury bill rates. And that has been moving closer. Just a few weeks ago, the calculations suggested that it would be June of next year for the top, but it is now coming quite a bit closer. And I think that is mainly due to expectations that the economy may be slowing at a rate that many had not been anticipating several weeks ago. Even today, we had existing home sales coming in weaker than expected. In fact, most economic reports are coming in weaker than the estimates and weaker than the previous month's reports. So March of next year is my prediction for when rates will be topping.
So if the rate of inflation may be slowing, how will this affect the stock index futures, Alan?
I think we may be seeing that right now with what's going on in stock index futures today. There really was no news that would account for today's strength. However, we are seeing a lot of the commodities that we watch carefully starting to show some signs of pressure, and that would include the energies, with crude oil dropping sharply last week, gasoline, also natural gas under some pressure, not to mention copper, which has been down 50 cents since the June highs. So some of these commodities showing some signs of pressure, and that may be influencing the Fed ultimately, not right away, but down the road to be less hawkish. And that could be exactly why we are seeing today's gains in stock index futures with, once again, very little news that would account for the strength other than commodity prices now coming under some pressure as of late.
Thank you very much to both of you. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.